As a government is concerned, government is a machinery of the state through which the affairs of the state or a nation is being managed. Government cannot do anything without revenue in order to perform their functions. Government cannot do anything without revenue to perform their function. As a result of that, they need to look at the means which revenue can be generated. As a result of that, what are the various means through which government can generate revenue? That now leads us to what we call government revenue and sources. Now, there are various means, various ways, various channels through which government can generate revenue. We have different means through which revenue can be generated by the government. Among these are taxation. Taxation being referred to as compulsory levy imposed by the government on the citizen and their property. Government is meant to tax the citizen either on their profit or on their property. They are meant to pay tax. Based on the tax the citizens are paying, there are direct benefits that they are meant to enjoy as the system is concerned. On this, we have different types of taxation, which we are going to look at in the future. We have what we call direct tax, we have what we call indirect tax. We discuss what we mean by direct tax, and we also discuss what we mean by indirect tax. Apart from tax, as source of government revenue, we have what we call fees. These are payments made by the users of public services on cost-bearing basis. Any question? Another one is fine. Fines and penalties. For people living in the society, if there is any offense being committed, they are meant to pay fines or pay penalties to the government based on the law of the land. Fines refers to as penalties imposed by the government against the law, which for any person that breaches the law, they are meant to pay fine. Any person or firm from which has been proved guilty by the law, such firm must pay fine or penalties. Another one is what? Grant. Grant refers to as non-payable money received by the government from another government with the aim of helping such government either to improve or to start a project which is of great importance to the society. What are we referring to? Grant is referred to as the money released by a particular government to another ant or to another unit of government in order to assist such a government to carry out the task by the constitution and which serve as a financial support. It serves as what? Financial support. It could be government to government or government to organization. Grant can be given as what? Government to government, or we can look at it from another point of view, which we look at it from what? Government to individual. Another one is what? Foreign investment. Government can invest money in the foreign investment or any forms of what? Business that can bring what? That is profitable in nature. In the future, we look at what? Investment appraisal, but not now. Another one is what we call public debt or borrowing. public debt or borrowing. Public debt or borrowing. Now, in terms of this, government can borrow money from another government or from an organization in order to be able to carry out their obligations or their duties. These borrowings can be internally or externally. It could be from another country government, depending on what they are using as a means of raising. Sales of national assets, they can sell public properties in order to make money. All these are means through which government can generate revenue. Another area we also need to look at this particular topic is concerned is revenue collection agency in Nigeria. Who are the revenue agents in Nigeria? These agencies are those who are meant to make money for government. They are meant to collect some forms of revenue on behalf of government. Among these are Nigeria National Petroleum Corporation, NNPC, came into being in the 1st of April 1977 through the decree number 33 from the dissolution and merger of the Nigeria National Oil Corporation, established in 1971 under the decree of Decree 18. Now, what are we referring to? In a simple analysis, NNPC is an organization, is an agent that are meant to generate revenue through crude oil for government. There is a particular ministry called Ministry of Petroleum. This so-called NNPC is under this particular ministry. The establishment of NNPC was meant to optimize the use of scarce indigenous human resources available in the oil industry. Simply means NNPC is one of the agencies that government can use as a means of making money. Another one is Federal Inland Revenue Service, FIRS. This is an organization put in place to collect some taxes on behalf of the government. Now, let's look at what the law says or what we have in our book. Federal Inland Revenue Service started as part of the Colonial Tax Organization on the name of Inland Revenue Department of Anglophone, West Africa. The department's scope of administration covered in Nigeria, Ghana, Sierra Leone, and Gambia. In 1943, the Nigeria Inland Revenue Department was carved out of the Inland Revenue Department of the Anglophone, West Africa, and established as autonomous body under the supervision of Commissioner of Income Tax. What are we referring to here? Simply means FIRS has been in operation since Alhaji máa pè é padà tí máa ti ṣetán ẹjọ́. In 1943, all this has been in operation. What we are trying to say here is that FIRS has been in operation on not before Nigeria independence, and they have been collecting taxes on behalf of the colonial master. In the process, they tried to carve out this particular what as under the West African state, this so-called organization, which is now served as a body that is collecting tax for the Nigerian government. Their so-called responsibility is to collect taxes on behalf of the federal government on the limited liability company, and also to collect taxes, collect what? Taxes. They are also there to collect what? Taxes on behalf of the federal government in terms of what? Payee. We are going to discuss that in the future as we are going. Another one is what? State Board of Internal Revenue Service. That one is meant to collect taxes on behalf of the state government. Let's look at what this is referring to. At the state level, the Personal Income Tax Act 1993 established the State Board of Internal Revenue Service with responsibility for personal income tax of the individual and non-corporated bodies, except residents of the Federal Capital Territory, member of Nigeria, police force, member of armed forces, as well as staff of the Ministry of Foreign Affairs and non-residents. What we are talking about is that the State Board of Inland Revenue are responsible for personal income tax and also to collect taxes on behalf of the state government in terms of non-corporated corporations, such as ventures or enterprises. They are also charged with responsibility of collecting taxes from all these organizations, that they are non-limited companies. Non-limited companies are meant to pay their taxes to the state government, while the limited company are meant to pay their taxes to the federal government. Another organization here is Department of Petroleum. Department of Petroleum. Department of Petroleum. Now, what is responsibility of this particular department? At the onset, petroleum matter were handled by the hydrocarbon section of the Ministry of Lagos Affairs, which reported directly to the Governor General. The unit kept records on matters relating to exploration and importation of petroleum products. It also employs safety and other regulations on matters which were then mostly product importations and distribution. As the activities of the petroleum industry expanded, the unit was upgraded to Petroleum Division. As the system is growing every day, they look at it that there should be a better development. As a result of that, they take into consideration that they should upgrade this so-called area. Now, they later developed this to the next level. And what are their responsibilities? The Nigeria National Oil Corporation was created to handle the direct commercial operation activities in the oil industry on behalf of the federal government, while the Department of Petroleum in the Ministry of Mining and Power continued to exercise statutory supervision and control of the ministry. In 1975, the department was upgraded to Ministry and named the Ministry of Petroleum and Power, which was later renamed the Ministry of Petroleum Resources. Decree 33 of 1977 merged the Ministry of Petroleum Resources and the Nigeria National Oil Corporation to form Nigeria Petroleum Corporation, Nigeria National Petroleum Corporation, that's NNPC, in order to conserve then this scarce manpower in the oil ministry. This decree also created Petroleum Inspectorate as an integral part of the NNPC and entrusted it with the regulation of the petroleum industry. But in 1985, the Ministry of Petroleum was re-established, but the Petroleum Inspectorate renamed with the Nigeria National Petroleum Corporation until 1988, when the National Petroleum was reorganized. The role of the DPR was basically to look into the what? Inspection. They are the one handling the inspectorate aspect of the petroleum in terms of the activities, in terms of the measurement, in terms of gauge. Aside this, we also have what we call Nigeria Customs Service. They also have their role to play in terms of making money for the federal government, in line with what put in place in 1891, being adjusted in 1922 and was also amended in 1945. What are their roles and responsibilities? The Nigerian Customs Service, a paramilitary organization, has existed since a little of a century ago under the British colonial administration, when Mr. T.A. War was appointed in the year 1881. The Director General of Customs was the collection of the inland revenue in the Niger Coast Protectorate. That was when we were still using Northern, Eastern, and Western Protectorate. That was when Nigeria was under what? 3 divisions. Now, in the process, this appointment was formalized the duty which the department had been performing under the Royal Niger Company. The name Department of Customs and the Excise emerged in 1992, when the first controller of Customs and Excise Federation of the Nigeria was appointed. Towards the end of 1945, the Custom and Excise Preventive Service was established under the leadership of Mr. Nicol Wheaton. The Nigerian Customs Service statutory function can be broadly classified into 2, categorized namely core and other function. The core function, the two core functions are collection of revenue, that is collection of import duties, excise duty, and accounting for the same, that is accounting for those import duties and excise duty. The next one is prevention and suppression of smuggling. smuggling of goods into the country, or smuggling goods out of the country. It is the duty of the custom to look into that. Other functions are this: implementation of the government's fiscal measure. There is what we call fiscal policy. There is what we call monetary policy. Federal government handle the fiscal policy, while monetary policy is also meant to be handled by the federal government, but it's going to be handled through the central bank, the apex bank of the country. They are the one managing the monetary policy. While the fiscal policy is meant to be managed by the federal government. And this fiscal policy includes the following: placing embargo on banned goods to prevent what? Smuggling, or to eradicate smuggling. To make sure there is balance of payment. That is duty of the federal government. There is balance of what? Payment. They are also meant to look into the balance of trade, which is a component of balance of payment. Now, looking into that, they are also there to look at it from what? To put in place what we call preferential treatment for those nations that fall under the ECOWAS. Preferential treatment. Those nations that fall under the ECOWAS, it is duty of the federal government to also observe those nations and at the same time to give them preferential treatment under the treaty of what we call common tariff, common tariff, common market, and free what? Free trade what? Free trade zone, or free goods. All these are the treaties signed under ECOWAS. And all these are part of what federal governments are meant to look into before finalizing the system. Now, aside those ones we have made mention of, generation of what? Statistical data for planning purpose. Trade facilitation, they are there to facilitate trade. They are also there to implement the bilateral and multilateral agreements entered into by the government, which is what I made mention of. Collection of levies and charges. Collaboration of functions.
Are you okay?
Collaboration of functions with government agencies, including CBN, policies of NDLA, SON, NAFDAC, and Federal Inland Revenue. They are meant to work. There are other what? Other agencies aside those ones we have made mention of. They are those ones that are also representing government to make money. They are agencies under ministries. We have agency for power, which we refer to as what? One of those days, we call them NEPA. But presently, they call them what? Holding company, which they divide them into what we call Ikeja distribution. We have what? A co-distribution. All these, they are also agency indirectly to the what? To the government in terms of what? Distribution of power and other related agency in terms of health. What are the classification of these sources of what? Government revenue. Government classify all these sources of revenue into the following headings. We have head 1. We have head 1 indirect tax, head 2 direct tax. We have head 3 mining. We have head 6 direct allocation. We have head 7 direct tax payee. We have what? License and land revenue. We have mining of solid minerals. We have what? Fine. We have fees. We have earnings and sales. We have rent of government properties. We have what we call interest and repayment. We also have interest and repayment for the state. We also have what we call reimbursement. We have what we call armed forces. We have miscellaneous. All these are the sources of government revenue and their classification. Let's see what the burden says. However, with the 1989 budget, the federal government revenue sources were classified into two groups. The one that is meant to go to federation account and the one that is going to federal government account revenue. Which means we need to look into what we call federation account and we need to look into what we call federal government account. Now, the above classification was again modified in 1994 in line with Fiscal Finance Act. They reclassified it further, where we have what we call Federation Account Revenue Head, we have what we call Value Added Tax Head, and we have what we call Federal Government Account Head. The Federation Account is the account put in place by the government in order to account for the revenue to be shared by the three tiers of government. Federation account is the account put in place by the federal government, account put in place by the federal government in line with the Constitution, in line with the Finance Act of 1994. Finance Act of 1994, where the revenue that are meant to be shared by the three tiers of government are being paid into. The revenue to be reported in the federation account are Head 1, Head 2, and Head 3. The Head 1 is direct tax. Head 2 is, the Head 1 is indirect tax. The Head 2 is what? Direct tax. And the Head 3 is mining. Let me analyze it. Direct tax are those taxes that are levied on goods and services. Levied on goods and services, such as import duties, export duties, excise duties, value-added tax, ad valorem tax, stamp duties. All these are indirect tax. These indirect tax, the burden of the indirect tax can be shifted to the last consumer. And the indirect tax, the taxpayer that is paying the last payment of the indirect cannot ascertain amount payable as tax. For every goods you are buying in a community where there is a government, you are meant to pay VAT. But you don't know how much you are paying as VAT. But you are meant to pay VAT. What are the economic implications of this so-called indirect tax? It serves as a source of revenue to the government. It can be used as a means of controlling the economy. It can be used as a means of controlling the pattern of consumption of people. When the nation is depending on importation and the government of the nation want to control the pattern of consumption, want to control inflation, they will increase the tax rates on indirect tax. As a result of that, they will discourage people consuming the foreign goods while they are trying to make them to continue consuming their local made goods. On that aspect, We also have what we call direct tax. Direct tax are taxes levied on profits or income of the citizen. Taxes levy, compulsory levy imposed on the what? On the citizen's incomes or properties. And is now being subdivided into the following. We have direct tax and what? Indirect tax. The indirect tax has been explained, but I need to explain classes of what? Indirect tax. On the indirect tax, we have different classes of what? Indirect tax. We have what we call import duties. We have what we call export duties. We have what we call excise duties. We have what we call value-added tax. We have what we call stamp duties. Stamp duties is the duties imposed on what? Levied on instruments or documents. Value-added tax is the tax levied on what? On goods or services as a result of what? Additional value to be created by the government, which based on additional income or value being added by the buyer. Import duties is the what? The tax levied on imported products or imported goods. Export duties is the tax levied on local made goods, on what? On goods to be exported out of the country. While excise duty is the tax levied on local made goods. Excise duty is the tax levied on local made goods. Export duties is levied on goods that are meant to be exported out of the country. Then the direct tax, we said direct tax is imposed or levied on the profits or income of the citizen, in which the amount paid as tax can be ascertained by the taxpayers, but the burden of the tax cannot be shifted. You can't shift it to anybody because it is part of the profit you have realized that government is collecting. If you made what? 1 billion, you pay what? 30% of that 1 billion to the government at the end of the year, after preparing your account. Then E3 is what? Mining. The E3 that is referring to mining simply refers to as mining of crude oil, and any revenue realized, any forms of revenue or any related revenue generated through this mining of crude oil are meant to be paid into what? Into the federation account. E1, E2, and E3 are to be paid to federation accounts. While other headings, other revenue, other sources of revenue are meant to be paid into federal government account, which is called what? Consolidated Revenue Fund. Now, I've analyzed that, I've explained. Let's look at what the Constitution says. Federation account was established by the section 162 of 1999 Constitution of the Federal Republic of Nigeria. The federation account is one into which shall be paid all the revenue collected by the government of the federation, with the exception of the proceeds of the payee of the personnel of the armed forces of the federation, the Nigerian police force, foreign service officers, and residents of Federal Republic. The federation account is a distributable pool of accounts from which allocations are made to the federal government state and local government council. On such terms, all in a manner prescribed by the law. Currently, the figure in the pool is distributed using the revenue allocation formula over the years as stated below. They are year to year. They are all here. Now, as at today, are you with me? As at today, what we are still using to distribute the revenue in the federation account is the one modified in March 2004, where the federal takes 52.68%, state are meant to take 26.72%, and local government are meant to take what? 20.6%, making a total of 100%. Or not before now, they were using all other what means according to what revenue mobilization what commission in the line of what Indoji, Mapasin, and others. All these are in your material. You can read them up. Then revenue allocation formula. There are things that are meant to be deducted from the federation account before the distribution. We have 13% derivative. This 13% derivative is the amount to be deducted from the revenue oil that is meant to be shared among the oil producing nation. Let's see what it says. 30% of the revenue derived from oil source of derivation. They are the ones to enjoy that. The next one is 7% and 4% of the gross revenue of the federation account are to be allocated to the Customs Service and Federal Inland Revenue Service, respectively. Now, 7% is going to go to custom. We call it collection charges for administration purposes. All the money collected by the what customs, they will deduct 7% of it, which they will report the remaining one. 4% will be deducted by the Federal Inland Revenue Service as their collection charges. This is only chargeable on non-oil revenue. 4% is chargeable on non-oil revenue. The next one, the rates stated above are the first line charges. That is 13% source is adjusted, deducted in the oil sector revenue received from the total oil proceed. 7 and 4% of the revenue received are taken out of non-oil what revenue collection. Whenever whatever remains in the federation distributable pool is shared between the 3 tiers of government straight away. The allocation of the 36 states, revenue is distributable net of adjustment in the earlier 3 notes or bullets above. Abuja is considered as a state to make 37, which will be shared to 26.71%. As the Nigerian system is concerned, Abuja is also referred to be a state and is there to take what? Part of what? Is there to share among that particular 26.7%. The local government that we have, which is 774 local governments in Nigeria, they will also share that 20.6%. On what basis are they going to share this? We have the principle of distributing, the principle of distribution of the local government and the state what allocation. We use what we call 40% of the equity of all the states as allocated. We have what? %40 of the population, 10% on the independent revenue efforts, and we have 10% of development education. For this later being rewards adjusted, they readjust it into 40%, 30% on the population, we have 20% of the landmarks, and we have what? 10% of internally generated revenue. That is what they are using today to distribute what? We have a committee. As of today, there is an adjustment that has been done in the distribution formula of the state and local government what? Revenue. We use population basis. So we use what? The worst one is what? Equity basis, which is equal basis. The second one is what? Population basis. The next one is landmarks, which they are using as at now. And the last one is what? Internally generated revenue. The first one, 40% will be on equity basis. The next one, 30% will be on population basis. The next one, 20% will be on landmarks. The last one, 10% will be on internally generated revenue. That is what they are using as at today. The Federation Account Allocation Committee, FAC. Federation Account Allocation Committee was set up by the Allocation of Revenue, CAP A15, LFN 2014, that has been adjusted at that particular period. Upon an allocated fund from the Federation account to the 3 tiers of government, the federal, the state, and the Federation Account Committee meeting is normally divided into 2 sessions, namely technical session and philanthropy session. The membership of this committee are Accountant General of the Federation, State Accountant General, representative of the following agency: NNPC, FIRS, Nigerian Customs Service, Department of Petroleum, DPR, Revenue Mobilization and Allocation Fiscal Commission, Federal Ministry of Finance, representative must come from there, Central Bank of Nigeria, CBN, National Planning Committee, Office of the State and Local Government Affairs, Office of the Vice President, Directorate of the Military Pension, Office of the Head of State, Head of Service, or Office of the Head of Service and Federation, Department of Civil Service Pension. All these are meant to form a what? A committee to look into what? Technical session and plenary what? Plenary what? Session. What are their functions? Their functions are also stated below. To consider the accounting returns of the revenue collecting agency. What do they return? All the revenue they have collected, they look into it. To deliberate and consider the revenue available for distribution. To make recommendation of the plenary session for the adoption of the revenue to be shared among the three tiers of government. To consider any other issues sent from the session. Membership of Federation Account Allocation Committee, that's FAC. We have Honorable Minister of Finance as the chairman. That is the member, which is different from the what? Technical. We also have State Commissioner of Finance, Accountant General of the Federation. We have State Accountant General. And we have representative of the third organization mentioned under the what? The 13 organization mentioned above. We have representative there too. We've looked into their functions. We also have what we call State Local Government Accounting Allocation Committee. They also have their own roles to play. Who are the what? They said this committee was set up to ensure equitable distribution of the statutory allocation to the local government from the federation account, and 10% of the internally generated revenue. Simply means local governments are meant to enjoy 10% of internally generated revenue of the appropriate state government are shared to the beneficiary in accordance with the 1999 Constitution, using stipulated criteria, which includes equity, population, primary school enrollment, and internally generated revenue. What are the composition of this one? We have the permanent secretary of the local government affairs. We have all the state chairman of the local government in the state. We have representative of Accountant General of the state, and we have federal pay office in the state. These are the tax to be paid, the revenue to be paid to the federation account. Look at it. Head 1, indirect tax. These are tax on goods and services, I've explained it before, in forms of custom and excise duty, forfeited, penalties, and VAT. We also have Head 2, direct tax. These are payable by the individuals and firms, such as company income tax, petroleum profit tax, capital gain tax, VAT duty assessment, personal income tax of the foreign. Those are the example of what? Direct tax. Then mining. These are oil pipeline license fees, rent of mining rights, mining fees, royalty on mining, NMPC, earnings from direct sales, penalties for gas, lead, and rent of oil well. All these are what make up the mining that are meant to be paid to the federation account. Now, federal government account or consolidated revenue fund account. This is the account of federal government where other revenue are meant to be paid into, with the exception of Head 1 Head 2, and Head 3. All other heads of revenue are meant to be paid to consider revenue fund account or federal government account, with the exception of Head 1, Head 2, and Head 3. Let's look at what the book says here. The Consolidated Revenue Fund account was established by the Section 80 of the Constitution of the Federal Republic of Nigeria, 1999, except those revenue items which are specifically designed to other funds. All others shall be paid into consolidated revenue, aside Head 1, Head 2, and Head 3. Someone is asking a question. Chidima, please, sir, what is Head 4 and Head 5? Those ones has been omitted. Yeah, they have been what? Removed. They don't form part of the revenue to be paid to those two accounts. They are another set of revenue that has been what? Removed from the streams of government revenue. Analysis of the various sources of revenue payable to consolidated revenue. We have Head 6, we have Head 7. Can you see them? That is allocation from the Federation account. We have directors, which is what? Payee of the Federal Armed Forces, Police Force, Foreign Affairs, and Resident of Abuja. We have Head 8. We have Head 9, which is mining of solid mineral. We have Head 10, Head 11, we have 12, we have 13, we have 14, we have 15, we have 16, we have 17. All these are meant to be paid into consolidated revenue fund account. And what are the likely charges to be seen in the consolidated revenue fund account? We have all what? Recurrent expenditure, all recurrent expenditure in terms of personnel costs, overhead costs, and service of the national debt, salaries, and consolidated allowance of the statutory officers. Who are these statutory officers we are referring to? We are talking of what? Police Service Commissioner. We are talking of Directorate Commissioner or General. We have what? Public Service Commissioner. We have what we call Nigeria Law Reform Commission. All these officers are Accountant General, Auditor General, and General. We have independent what? INEC, Independent National Electoral Commission. We have President and Justice of the Federal High Court Appeal, Chief Justice and Judges of the Federal High Court, Chief Justice and Judges of the Supreme Court. Pension and gratuities are also meant to be paid from this account. And the value-added tax now. Now, value-added tax doesn't form part of this particular what? Account, but we paid it into what? Into consolidated revenue fund account, which is meant to be shared by the 3 tiers of government. It's meant to be shared by 3 tiers of government. Value-added tax was formerly value-added tax was formerly was formerly 5%, but presently has increased to 7.5%. Value-added tax is a tax imposed on value which the supplier or seller of goods or service added to the goods or services before selling it. That is the purpose of the value-added tax. That is why we call this what? The development tax. The introduction of value-added tax was necessitated by the need to boost the revenue of government from non-oil service following the fluctuation in the oil revenue due to the glut in the international market. The price of oil fall. As a result of that, they introduced value-added tax. Value-added tax was in 1994 fiscal year with the promotion with the promulgation of value-added tax decree 102 of 1993 at the rate of 5% and is being administered by the Federal Inland Revenue Service. In 2020, express value-added tax rate at what? 7.5%. And the distribution of value-added tax are this. Federal is taking 15%, state is taking 20%, while local government is taking 35%, making a total of 100%. That is the distribution of what? Value-added tax. Distribution of value-added tax, we have states 50%, federal 15%, local government 35%. Now, the next account we also meant to look at is development fund account. Development fund account is the account put in place, is the account put in place to be able to monitor capital projects. What does the Constitution say? The existence of the Federal Development Fund account was solidified by the 1999 Constitution of the Federal Republic of Nigeria, although created earlier by the Section 25 of the Finance Act 1958. That's control and management of finance. The fund was created for the purpose of capital development project. Capital development project, which is the of what I explained. The source of revenue, the source of money accrued to development fund accounts can be categorized or divided into the following. 1, contribution from or transfer from consolidated revenue fund. These are yearly transfer of money from the consolidated revenue fund to the what? Development fund account. External grants. This usually received from the foreign countries and non-financial institutions. External loans, internal loans. All these are what? Content of the development fund account, and including donations. If there's a gift and donations, it's also form part of these accounts. What are the charges to this account? Summary of what? Capital expenditure payment, general administrative relating to what? Maintenance of barracks or police station, staff housing, or motor vehicle and hospitals. External finance obligations. Anytime government is what? Spending money. All this in terms of what? They want to assist what? Other what? Organizations. Loan to states or to other nations. All these are the things you are going to see in the what? Charges part. The last one, but not the least here, is contingency fund. This is the account put in place for unforeseen circumstances. What does the Constitution say about it? Constitution and Section 83 of the 1999 Constitution. The fund is set up to meet unforeseen expenditure, urgent situations, occurred by the national disaster, the contingency fund derives its income from the consolidated revenue fund. This comes from what? Consolidated revenue fund. What are the charges? The charges will arise on contingency ground in exceptional cases where environment is not possible and where an application of the additional provision reveal that its issues of funding cannot be delayed without causing serious what? Injury. What we're saying is this: any expenditure that government is going to incur that cannot be delayed and they are unforeseen, they don't plan for that, it doesn't form part of the government plan, all these are meant to be in this contingency account. These are the summary of this so-called chapter. Any question? We have plenty of questions to look up to, but all this will be handled in our next class.